And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, fellow futures traders, family, and friends. It's time for the market forecast for Tuesday, August the 23rd. As always, our focus is seeking accurate context, good risk management, and always remaining patience. Today is National Ride the Wind Day. That sounds like a good day for a trading day, right? We can ride the winds of these markets to some decent profits, and that's what we're hoping for everybody. As far as economic numbers this morning, nothing due out just yet. At 8:45, the PMI composite preliminary is due out, and 9 o'clock we have new home sales. We still have a lot of information coming this week, and I think maybe some of our markets are kind of settling in to some balance, or quite possibly before all this data comes out. As far as the news, U.S. equity markets seem to be seeking balance, awaiting the GDP and news of the Jackson Hole Symposium. The euro hits a 20-year low versus the dollar, and the European PMIs that came out earlier slip into contraction territory. So more and more information, like the whole world is coming into recession. The Saudi oil minister threatens supply cuts, ratcheting prices higher in crude oil, citing a disconnect that they are citing, or that they perceive, in futures pricing and the tightness of the physical market. So got a nice up move in crude oil, unfortunately, up against some pretty important resistance, if you ask me. We're going to see that in the charts later on. But all I can say is drill, U.S. producers, drill. As always, I ask that you, if you like what you see, hit the lucky like button. If you don't like what you see, email me at jhoagland@topstep.com. Let me know what I can be doing better. As always, like, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. And I ask that you subscribe to our YouTube channel so you can get notifications when we do go live. We have Coach's Playbook today at 11:30. We'll be going live with that. As far as the VIX, the dollar index, and the yield on the 10-year VIX, a little bit lower this morning off the high from yesterday. Currently at 23.59 last I checked. The dollar index continues to leak higher at 109.12, and the yield on the 10-year continuing to leak higher at 3.04%. Good morning, everybody. As always, it's Dario at the top of the list. Dario wins the prize today. Shaw Cunningham, good morning. Theo, Andrew, Scott Saw, and he conquered. Tachyon, Ron Merlot, Ron Malott, Orion, good morning. Jeremy, Bill, good morning, my brother Rick. Love you, buddy. Frederico, Terry King, chilling with Dylan. Serenity Trader, good morning. JD, George Duquesne, good morning. Devante, Sarah Hall, good morning. Prayers and love to you as well. Brody, Alfred, Glitter Sandwich, Jerry is awake. Dimitar, Marcelo, DA, Stephen C, the Rooster. Maureen broke my losing streak yesterday. Awesome. Focus on managing risk, not profiting. Thank you. Awesome. It's all about the risk, isn't it? Grim Reaper, good morning. And Unicus's quote for the day: the heart lies in the head. The heart lies and the head plays tricks with us. But the eyes see true. Look with your eyes. Then comes the thinking afterwards, and in that way, knowing the truth. It's quite a quote there, Unicus. It's kind of hard for me to read. Maybe I should put my glasses on. But very nice quote. Yes, we have to really see. We have to trade what we see, don't we? Zareen, good morning. JST Wave, George, good morning. Lacey's running around here somewhere. She's been barking at all the people walking by with their dogs, wishing she was out there, but she'll be out there soon. Joe, good morning. Cavs and Cubs, good morning. Steve Frischman, good morning. Jay, Jules, good morning to everybody. We had a good session in group coaching yesterday. We have Make Hogue Money today right after the market forecast. Looking forward to that. There's the link so you can register and join us in our Zoom meeting. If you don't want to do that, you can watch it now live on YouTube. There's a little bit of a delay, maybe about 5 or 10 seconds delay between what we're actually doing and when it comes out on YouTube. But we've had some folks, enjoying watching it there. So it's totally up to you. If you want to join us in our Zoom meeting, you can be a participant. You can vote. You can make comments and chat. And we're kind of keeping an eye on both the chat and Zoom and on YouTube, doing our best to take care of that. Always looking for suggestions and feedback on how to make Hogue Money better, on how to make everything better for you. Again, you have suggestions or ideas, jhoagland@topstep.com. Let me have them. Good morning, Andrew. Mike Ansel. Good morning, James Swan. Good afternoon. Good morning. I know you are over the pond, James. And we're going to jump into these charts pretty quick here. We try and get done with the forecast relatively early on Tuesdays and Thursdays so we can get to Make Hogue Money. What is Make Hogue Money? Well, it gives you the opportunity to come up with trade ideas that I'm actually going to take. We vote on them. We have some really good conversations. I think it's really beneficial for anybody that's in trading to kind of be thinking about and looking at what somebody else might be thinking and finding success with. So we'll look forward to seeing you there. Okay, the E-mini S&Ps on the daily chart. Let's jump in, shall we? All right, so we've got ourselves a little bit of a pullback here, and it's just amazing how different the two markets that we look at here on the forecast are, the E-mini S&P and the Nasdaq. They are both telling almost completely different stories, but they are very similar products. The overnight test of the weekly kickoff low and the naked point of control that we were looking for, that test to yesterday, happened again in the overnight. Yesterday, a big move down, the biggest move down we've seen since June, and we lost 8,400 in open interest. It almost seems like I want to double check that because it doesn't seem it could be true, but it is. Estimated approximately a loss of 8,400 in open interest. So we didn't bring in new business. We are still getting out of old business on this pullback. When we look for a healthy auction, we look for an increase in open interest, and we did get a slight increase in volume in New York and in futures, but I wouldn't say that it's anything that's all that impressive. 3.8 billion in the New York Stock Exchange, which is a little bit higher than the previous sessions, but nothing again really notable. It seems to me that logic says that these markets, these equity markets, may seek balance, maybe a volatile balance at that, awaiting the data that we're looking for later on in the week with the GDP and the Jackson Hole Symposium. I'm looking at our weekly kickoff low as somewhat pivotal to direction. If we can accept down below weekly kickoff low, that acceptance may push us lower. If we can't, then we may start to put up our right hand shoulder. If we are going to see this as a head and shoulders, we're going to need to put up a shoulder here, and then we'll see what happens after that. So take a look at the 30-minute chart here. Here's our push to the downside yesterday, losing open interest again, not gaining open interest. Overnight inventory, we really don't have any. We really don't have any overnight inventory with which to deal with. We had a double distribution trend date yesterday, which means that there's a single line of TPOs between this distribution of volume and time and this distribution of volume and time. Take a look at this on the TPO chart. Okay. Here's what the profile, the volume, the TPO profile looks like. A consolidation area, and a rejection area and a consolidation area. Right now, it looks like we're going to be opening outside of the area of repair, which would lead us to think that the market might be moving lower. We tested to a naked point of control yesterday. We had tested to a naked point of control last night that we've yet to test to in the regular trading hour session. Now, there was a question yesterday in the group coaching session that I didn't get to is, what is a naked point of control? Well, a naked point of control is you got to think about what the point of control is. A point of control is a high volume node in volume profile. In TPO profile, the point of control is the area or the price that is most visited. It is considered the fairest price of the session. Yesterday's point of control in TPO is pretty much our overnight high at 41.57. Our volume point of control is a little bit higher than that. But when these TPOs, these points of control don't get revisited in the future, they become visual targets and levels of basically kind of reminding traders of comfort in those levels at some point in the past. So we know we've got a naked point of control that we tested to overnight just below the weekly kickoff low. We've rejected that area, at least for now. If these markets are going to be seeking balance, then inside yesterday's area of balance, our overnight low, perhaps our overnight high, might be an interesting area to start. We're going to be probably opening inside value from yesterday, which is kind of iffy because it was an out of balance type of day. So we're gonna have to be, demanding good trade location for make Hogue money today. It was looking kind of like we were going to open between these two high volume nodes to kind of open in an area of repair. That may not be true. So I'll be looking for opportunities near our overnight low, this naked point of control, and weekly kickoff low for a potential execution this morning. Anything up above here. The overnight high doesn't thrill me that much, but value high from yesterday kind of does. We've got all kinds of now structure above the market that is viewed as weak structure. We've got the gap that we left yesterday. We closed a previous gap throughout the session yesterday and left one just above. Naked points of control, naked point of control, naked point of control, weekly kickoff high, and last week's high. Last week's low is right here. We've already been taken down below that level. So we still have lots of weak structure above and below this market. Anything can happen. Thinking what the market might be thinking, what the majority of the traders might be thinking. If something goofy is going to happen later on in the week, I want to prepare myself. I want to get positioned so that I'm not going to lose all my money if something wacky happens later on in the week. So I'm going to be looking to hedge. I'm going to be looking to lighten up. I'm going to be not thinking too directional. And that's kind of my thought as to what's going to happen in the E-mini S&Ps. Look at the difference in the Nasdaq. We're going to go right to the Nasdaq and check the crude oil here shortly. So yesterday we closed below weekly kickoff low, where we had trouble getting to the weekly kickoff low in the S&Ps. We added open interest in the Nasdaq of approximately 5,800, and the volume was okay. I don't think it was all that impressive, but just the fact that we added new shorts. We have sellers placing bets to the short side in the Nasdaq, which we have not yet seen in the S&Ps. So there's a disconnect here that's kind of, frightening and confusing me. I'm a bit of a caveman, so this kind of throws a horseshoe into the plans because we're getting different information from similar markets. Okay, so it is a totally different story. That closed below the weekly kickoff low has now been presenting as resistance in the overnight. That weekly kickoff low, 12,956. We got 9 points above it in the overnight, but I wouldn't say that that's a mandate for higher pricing at all. Open interest increased. The drop in the E-mini S&Ps, volume maintains, not all that impressive though. Here's the 30-minute chart. Here's where we closed below that important inflection level. It looks like we're going to be opening below the area of repair that is similar to the S&Ps, and it looks like in both of them we may be opening outside of that area. Now, the Nasdaq is outside value, which value is kind of iffy again because yesterday was kind of an imbalanced day. It looks like we're heading lower, at least at the beginning. We've got our overnight low and our overnight high that really kind of look like levels of interest to me, especially the overnight high up against this weekly kickoff high. No real overnight inventory with which to deal with. We're bordering value or bordering the range from yesterday. I'm going to try and stay patient today, as difficult as that might be, because we may be opening outside of value in both. What about the S&P here? See, we're a lot closer to opening inside of value in the S&Ps than we are in the Nasdaq. So again, a little bit of a disconnect there. So I see your comment there, Rusty. I'm sorry. 3 lines in sight. The loss in the S&Ps was mostly in the September contract. They did add some contracts, about 2,200 in the December contract. In the Nasdaq, the majority of the open interest increase, the vast majority, was still in the September contract. So when I collect open interest information, I collect all of it. All right, let's go take a look at what's going on in crude oil. We're a little bit late for the opening. I'm finding this market extremely interesting, although I don't want it to go higher. Rollover is now over. We're not going to have to worry about that for another 3 weeks. The Saudi talk has pushed price higher. That has put in a third point of contact on this trend line. We hear Matt Hoyt talk about the frequency of testing of these numbers, of these lines. The more they're tested, the more important they become. So we finally got our third test of that trend line. It's going to be an interesting spot for us. Potential change in direction upon acceptance above that level. The overnight high I'm viewing as somewhat pivotal. Here's the 30-minute. Here's our deep dive yesterday, and then Saudis came out and said what they were going to say. We've got overnight inventory to the long side. Last week's high in play. Previous weekly kickoff level also in play at 92.50. We've opened outside of range and outside of value. So let's take a look if the opening range trade has played out for anybody here just yet. We've got 91.50 to 39 tick opening range, taking out the high of it, not finding direction right away. I'm not going to be touching this opening range here today, I don't think. I'm going to be looking for better trade location as the day goes on. If we can get a better trade location back down towards the potential gap close, I like that idea. And our overnight high, of course, is probably going to be something we would be looking at for a potential opportunity. Right now, the opening range, not truly in play here. Gold, I tweeted yesterday, is gold getting cheap yet? Is gold getting cheap yet? With the dollar where it's at, it's going to be tough for gold to find some bids. Technically, we've got our whole moving averages that are largely below price. Open interest yesterday on a down day was actually lower by about 500 contracts. So we're not bringing shorts into the money, into the market anymore. We're not placing short bets necessarily. Unable to test the weekly kickoff low yesterday, or at least not yet. Take a look at the 30-minute chart. So we have no real overnight inventory. The market, actually, the high of the opening range was settlement. how can you have a lot of overnight inventory when you open at settlement? And initially, the opening range was the high of the regular trading hour session. Just kind of looking at this and thinking about it yesterday, I was like, where is it going to be too cheap for gold? Is it getting there? It may be. Yesterday we put in this low. Last night, actually after the open, we put in this low. That's a higher low. We've been putting in higher highs since the end of the regular trading hour session yesterday. We've got lots of weak structure up above. We've got a gap that was created the day before yesterday. We've got naked points of control. We got things going on all over the place above this market. So here is that. That's not that trend line. That's a different one. I'm going to actually take this off of here. Didn't think it was still going to pop up on there. So we're unable to keep the opening range at the high of this regular trading hour session. In very short time frame, putting up higher highs and higher lows. I'm hopeful for a move back in the opposite direction. Not saying that this is going to be a low forever, but I think we may have gotten a little bit too short here. Witnessed by this loss in open interest yesterday. No sellers coming in to try and sell this market. We actually probably covered some of those shorts by the shape of this profile, this P-shaped profile. We're gonna have to see what happens for the rest of the day. Let's get to the euro. Haven't seen these levels in 20 years, folks. I was around then. Here's the daily. So we added 10,000 contracts. No, here's the daily. We added 10,000 contracts. What did I do here? Did I just do that? Hang on. Where did my daily go? Well, I'm just going to go with this one. Yesterday, we added 10,000 contracts to the downside. Volume was pretty decent. Okay, so it's looking like we are continuing to try and push this market lower. Here, hang on a second here. Here it is. So it looks like we've got everything in line to try and push this market lower. This line here is a measured move that puts us all the way down here. What is this? 97.18. That would be kind of wild. But everything is set up to do it. We've got the direction, we've got volume, we've got an increase in open interest, we got money coming into the short side. What does it mean for us today? Well, we open outside of potential repair. Going to be looking for this low of value to either be accepted and push higher or be rejected and push lower. There is a lot of upside structure that is weak above this market. Of course there's going to be. We've got gaps, we've got naked point of control. We've got gap, we've got naked point of control. This market's moved a long way in a short period of time. I'm cautious about a face rip and rally when all of these shorts decide they're going to start to cover. I don't know when, I don't know how, I don't know where, but it's more likely to happen. It's increasing the probability of that. The 10-year. Well, here we go. We added 37,000 in open interest on the push to the downside. Volume maintained yesterday. We are testing weekly kickoff low as we speak. Looking at it this morning, we were inside extended trading hour range. That has now changed. We've got a move to the downside here. We've got a small gap. No, it looks like we just closed the gap, and we're testing weekly kickoff low right now. If I were going to be trading the 10-year, this would be an area that I would be interested in an execution in either direction. This market is likely to either fail to accept down below and move higher, or accept and move lower. So this weekly kickoff low, really pivotal. I want to see if we close that gap. Yes, we did close the gap, so we don't have the gap from yesterday to today. That has been closed. And oops, sorry about that. Very important area down here. There's probably some fish down there. The natural gas. I looked at this morning just to check the volume because it is in rollover. Tomorrow or Thursday, we're going to move to the October contract. It is extremely thin. It is very illiquid. I would avoid trading this market during rollover with anybody's money. The open interest is blurred by rollover, losing 4,000 on this push to the upside yesterday. Again, that could be a function of rollover. So tomorrow or Thursday, we move to the October contract. And if you look at the dome for this market, there's lots of spaces. There's going to be lots of slippage for stops if you're going to be trading this market. Yesterday, we put together a pretty even bell curve, which makes me a little bit nervous. Overnight inventory has reconciled back to where it started. We've opened in range and value. I'm going to take this moment to suggest just watch this market. I wouldn't be trading this market because it is so thin and so whippy. It's just it's going to rip some heads off, and it's this even bell curve here just says, this area has used up its ability to facilitate trade. It's going one way or another. When and where, I don't know. Yeah, so if I were trading natural gas on a regular basis, I would think about maybe taking this week off because it is so thin and it's so whippy, and you're going to be you hit a stop, you're going to have tons of slippage on those stops. It just looks like a very dangerous place to be. I want to see what's going on in gold here. Hang on. All right, so we're just kind of hanging. Well, let's see. Yeah, no edge, no trade. Absolutely, Anne-Marie. Good to see you. Thank you all for joining me today. I am going to take my deep breath, stay humble, grateful, and creative in my trading today. Be good to each other. Be good to everybody else. Be good to yourself. We're going to see you for Make Hogue Money, hopefully. We're going to see if we can't get into some good trades, bring your knowledgeable trader that's inside of you with you, and we'll look forward to seeing you there. If I don't see you, trade well today. I'll see you for the Coach's Playbook as well as the recap at the end of the day, where we're just going to relax a little bit, take a look at what the markets did today, take a look at what we were thinking earlier, and have a little fun. All right. Trade well, everybody. Looking forward to seeing everybody. And we will be with you shortly. Trade well.